All right, it is time to get started. So good morning or good afternoon to everyone, depending on where you're logging in from today. I want to welcome all of you and thank you for joining us. At this time, Time Value Software is pleased to present today's webinar titled Mastering Interest and Penalty Calculations with TaxInterest Software. My name is Zach Cassie and my colleague today is Marty Bellerin. So today's agenda will look like this. We will transition into some sample applications to start to demonstrate how you might use tax interest in your practice or business.
So let's do some calculations. So first, let's do a state penalty. So state penalties are generally pretty easy to do. Most state penalties are not interest bearing, so they're easy to put into your report. If they are interest bearing, we'll show you a couple options of how to handle that. So let's look at a situation for 2019 tax year. We'll do Colorado. Tax due date 4/15/20, $20,000, and our state penalty is 5%. Get new. So when you bring up states, different jurisdictions, sometimes they come up and they say, oh, additional information. What that means is one of two things. First of all, sometimes we don't have all of the state's interest rates when we publish the program, and we do have them within usually about 10 days after the first of the quarter. And we'll put a note in there and we'll allow you to show you where to download it, give you the password, and then also you can call us and we'll get you the upgraded rates. Like Alaska doesn't publish their rate till after the first of the quarter based upon their state rates, state bank rates. So that's always an issue. So also some states have different situations, like Colorado has what they call a low rate if you pay it relatively early, late, so within a certain period. And then if you're long-term late, then there's a different rate. So we have those rates, that information built in. So let's go ahead and close. And we said to have 0/4/15/20. We're going to do $20,000. And Zach showed you we have an event called entered penalty. Entered penalty allows you to do a manual penalty calculation, and the date is critical to the calculation. So if it's interest bearing from, let's say, the due date, you put the due date, 4/15/20. If it was interest bearing from the assessment date, you'd put that date. And if it's not interest bearing, you'd use the date of the computation. So let's say we're using computation of today. So we put 09/26/24. We said with a 5% penalties, it'd be $1,000. And I can put failure to pay. And then when I go to compute, you'll see I have a tax, penalty, and interest. And when I go to my report, it's going to say failure to pay. It's going to spell it out. And here's the interest on the tax portion, no interest on the penalties. Here's my entered penalty, so you can actually build it into your report, especially if you're sending it to a client. Okay, let's talk about doing an estimated tax penalty. So this is a 2210, 2220 penalty. Generally, it's based on 100% of the prior year, 90% of the current year, whichever's lower. Obviously, there are exceptions. Everything the IRS does has exceptions. And what we're going to do is create 4 tax events on the deposit due dates, and then we're going to calculate the interest through the tax due date. And just so you know, the estimated tax penalty is an interest calculation, but when you're doing your calculations from the tax due date, the estimated tax payment is interest bearing from when it's assessed. So that's always a key to understand. Let's jump into tax interest. So we're going to use a different table than the federal. We're going to use the 2210 is for individuals, 2220 is for corporation. Both these tables use the same interest rate as the federal, but they use simple interest versus daily compounding, so it doesn't accelerate as much. So we said we'll use 2020, so I'm going to put deposit due date, so I'll put a tax on 04/15/20 for $5,000. And if they made some deposits or one payment or something like that for their estimated tax, you net that out. If they make a payment after that, let's say they made a payment on 4/15, you'd want to put the payment in there because once again, time value of money, so they're going to charge you for that. Then we're going to get T for tax, 06/15/20, 20,000. T for tax, 09/1/15/20, 5,000. And T for tax, 01/1/15/21, 5,000. Now we're going to calculate it through the tax due date. So this would be 2000, 04/15/21. And our estimated tax penalty is actually an interest calculation, it'd be $423. If you forget how to do this, we actually have a video on our website and we have a blog on our website that actually walks you through this calculation. Okay, let's talk about doing an IRS notice. So usually about 30–40% of our customers use TaxInterest to do IRS notice. And some notices are a page, page and a half, and they're relatively easy to do. There may be one or two penalties and one interest calculation. And then you get some that are 3 or 4 pages, and they get kind of cumbersome. There's lots of detail, and they move back and forth, and it makes it really challenging. So what we recommend is that you reconcile by category. You want to do by net tax due on the tax due date, and then each penalty and interest. And what we've done internally is we've developed this Excel worksheet. And if this is of interest, if you do these transcripts, if you want to send an email to info@timevalue.com, put attention Marty, I can send you a copy of the worksheet and then a blank template so that you can use it for your own needs. But what we do here is we're going to take the net tax due. We're going to take any subsequent payments. This was an estimated tax penalty. It's estimated tax penalty. I forget what this one was. This is a failure to file. There were multiple charges to that. Here's our interest. When we put it in here, I put my total here and then my notice total and compare them. They make out to the penny. Then I can use that information to actually put into tax interest too and make sure I cover all the bases. In this situation, this is a live case. What happened here is the IRS actually charged the assessed amount, the failure to pay amount assessed on the same date as the tax due date. So it was overcharged by $1,800 plus related interest. So this was $1,300. So if you send in the IRS or tax interest report and you explain this situation, you'll get this abated probably 95% of the time. Let's talk about doing BIN 48 accruals, corporate guys. So taxes is great to do this. If you do have quite a few UTP positions, or you're doing a lot of calculations every quarter, we do have an Excel add-in. Excel add-in, literally you can do 100 calculations in less than a minute. It's pretty slick and easy to use. It's a separate product under our tax interest product line. But basically what you want to do is you want to calculate each UTP separately. Penalties are not, most of our corporate accounts do not seem to use penalties because penalties are negotiable with the IRS and interest is not. Also, you do state interest calculations and international. Our Excel add-in does have 6 international calculations that are not in tax interest. What you generally will do is, let's say you have a 03/15/20 for $1 million in a certain tax position, and now you're going to go to compute. And assuming you're just doing interest, let's say we're doing it through the 3rd quarter of this year, you hit recompute, and then you'd go to your report, and you take this $25,000, and that would be your interest accrual for the quarter, and then you'd put that into your Excel worksheet. Okay, so that's kind of my finish for the day, and I'm going to turn it back over to Zach, and we'll wrap up our presentation.
Thank you, Marty. All right, so the product you saw today is $99 per user per year, and that includes updates and support for the year. And as Marty mentioned, we have the TaxInterest Fin 48 Excel add-in, and that is $500 per user per year. And if you are interested in the netting product, go ahead and give us a call or send us an email, and we'll be able to provide more details on that. And Marty and myself, thank you for attending today, and have a great rest of your week.